Hi everyone, welcome again to another financial analysis video with myself, Moeed Amin, and my colleague, Ted Wainman. Today, as you can see, we are looking at Square, so a well-known business payments company co-founded by Jack Dorsey, who's also the CEO of this company, but also the CEO of Twitter. They've been in the news quite recently for quite some time, actually, to be honest. They're doing very, very well. So this business came as a request from one of our viewers, Jeffrey Hall, who made some requests about other companies as well. So here's your video, Jeffrey. Now, just before we get into the analysis for the business, just to let you know about the stock price of this business. So went public in 2015. And if you'd invested then and held onto your shares till now, you would have invested in a 20-bagger business. So for those who are not familiar with that term, in the investment world, you have 5 baggers, 10 baggers, you may even have 20 baggers, although they're quite rare. Basically, that means that if you invested in this company, you would have either received a 5 times return, 10 times return, or 20 times return. And Square, in about 6 years, has given their investors 20 times return. In fact, just 12 months ago, if you'd invested, you would have made almost, more than double your investment. So this is definitely an interesting business. The question is, will that growth continue in its stock price? So if you want to understand that, one of the things that you must look at are the fundamental financial analysis of this business, i.e. its financial statement. And that is what we're going to go through with you today. We're not going to be looking at the other things such as the technology, the people involved, the partnerships that they have, etc. That we leave to you. We're only interested in the fundamental financial analysis today. So before we go into that, very quickly, don't forget to like, share, subscribe. Sharing and subscribing especially are important. If you have made the request, as Jeffrey has, if you're a subscriber, you will receive notification of that the moment we publish this video. So Ted, over to you. Let's share what we found out about Square. Interesting business because they're moving into the buy now, pay later industry, as well as PayPal, who they compete with. So we're really looking forward to what we found about the finances here.
Okay, so good to see you, Moeed. Thank you very much. Yeah, so just to reiterate again, if you are looking for this from an investment perspective, then you're going to need to do some other research as well. It's not just about the numbers. The other comment I would make is that this is a backward-looking presentation. We are looking backwards at the numbers from the past, so we're not speculating about the future and the future deals and the future opportunities and growth rates and markets they're moving into. So this is very much just the financial analysis. And another caveat, we are looking at the annual report and accounts. Now, when I talk about the annual report and accounts, this is the year end. These are the official figures. This is not the latest figures for this company. There's Q1, there's Q2 numbers available. And if you want to look for those, very easy to find them on the Square website under Investor Relations. And you can then kind of run your analysis alongside this and see what do the latest numbers tell you. But they're giving you sort of 3-month data, 6-month data. So what we're going to be doing here is looking at the 10K, okay, the 10K, the annual report and accounts. Now, there are latest figures available. There's quarterly updates, the 10Q available on their website. And if you want to look at those numbers, then go on their website, look under Square, under their investor relations, and they are available. And that'll give you 3-month data and 6-month data. But we're going to be looking at the annual report and accounts. So it's a little bit out of date, but it's going to give us a feel for this company. So the 10K gives us lots of information about the company, their strategy, what they're up to, who's in charge, etc., etc., etc. And you can read through that and look at the sort of key numbers that they want you to know about in your own time. So we are going to scroll all the way down to, I think it's about page 84. Here we go. And we're going to be looking at the income statement to start with. And here is their income statement. So first thing we notice is they give quite a lot of information. So they are involved. Here are the revenue up at the top. We're dealing in thousands of dollars. So when they say 3 million, that's 3 million thousand. So that's about $3.3 billion, just give you an idea. So total revenue for this company, just shy of $10 billion, about $9.5 billion, significantly up from the previous year. So, you know, they've doubled their revenue effectively. And what's interesting here is that they also give you a sort of fairly detailed analysis of this. So they'll say, here's our transaction-based revenue. So that's from the actual kind of the payment system. And here is the costs of generating that. And what they've done is that they've matched each one of these, the revenue, with the associated cost of sales. So you can, if you want, do a little bit of a breakdown. So the overall margin, 30%, looks pretty good to me. So you can actually do the analysis of these. So for example, the transaction revenue is about a 42% margin, similar to the previous year. Subscription is very high at 86% margin. The hardware, they're actually making a loss, a 60% loss on their hardware, but that's kind of that'll be a loss leader that's going to sell the hardware and then get people to use it, and then you can make money through the transaction. Bitcoin only 2%, so you know, very, very high. You can see, you know, all the growth in their revenues coming through Bitcoin, but they're not making any money from it. It's a sort of a 97 million. I say no money. They're making about 100 million, but you know, we're talking in billions here, so it's only a 2% margin. It's very, very low. So overall 29%, and all of that growth has come through Bitcoin revenue. Now we're not going to get into Bitcoin and El Salvador and the sort of bouncing around of the price, but you know, it's quite interesting that has been a major growth of this business, the Bitcoin revenue, and you know, maybe this becomes one of the crypto plays. So if you don't want to invest in crypto specifically, but you want to invest in the kind of, you know, the picks and shovels, then these guys are establishing themselves in that space. We come down to the trading account. So as we said, for their trading account, they are making a nice margin, a profit margin of about 30%, pretty strong profit margin. So scrolling down a little bit, we look at the sort of the bottom half of the income statement. So here is the gross profit from the kind of, you know, the selling the services and the cost of providing those services. The big number in terms of their operating expenses is and has been sales and marketing. And essentially, when we look at the operating profit, it's actually an operating loss, not a massive operating loss for this size of operation. So it's a loss a couple of years ago, a profit the previous year, a loss this year. It seems to me that a lot of that loss is driven through this sales and marketing. That, you know, that's a massive figure, $1.1 billion. So very aggressive sales and marketing campaign, but not unaffordable. So what they're doing is they're staying within their means. And Mo, we've looked at some businesses where, you know, they're clearly spending more money than they've got on sales and marketing with a view to hitting a kind of, you know, a critical mass or critical velocity, for example. So these guys, they are spending a lot, but, you know, and they are making a loss, but it's not a massive loss. Down the bottom, we've got some other bits and pieces. So previous year, there was a gain on the sale of an asset. So it's shown as a negative number. It's a negative expense, which means it's an income. So just, if you are analyzing this, just make sure that you're kind of, you know, you're checking, is it going in or is it going out, for example. Here we have, this is other income. Okay, again, it's a negative amount. So it's a negative expense, which means it's an asset, so a profit. And so what we come down to is our bottom line is they're making a profit. So they're making a profit. They make a loss 2 years ago. They make a profit last year, mainly because of their sale of this asset, and they make a profit this year, mainly because of this other income. And I don't know what that other income relates to, but it's just to be aware that this is not core trading. So what we're really summarizing is that this company it's trading at break even. That's kind of what I'm reading into these numbers. It's kind of, you know, it's making money, it's trading profitably, it's in lots of different areas, but it's spending most of that money on sales and marketing and growth. And one of the great things about this growth is it's organic growth. Okay, so there's a couple of ways a company can grow. You can either grow through acquisition, buying other companies, or you can just grow by selling your services to more and more people. And these guys are very much focused on the organic growth, and I will show you, you know, how we can see that in a minute. So there's the income statement. Let's move on to the balance sheet, which is actually comes just before these guys. So in terms of the balance sheet, we're going to look at the top half, which is the assets. Down here, we have the non-current assets. So these are the things that we need to run the business, property, plant and equipment, tables, chairs, computers, servers, all that kind of stuff. There's a little bit of acquired intangible assets, which will be, you know, if they bought another company. And you can see here the goodwill. Now, the goodwill it's relatively small for this company. So $316 million is a lot, but $316 million when you're talking about a company with $10 billion of assets is not significant. So that tells me this company has been growing through you know, less through acquisition and more growing organically by just you know, increasing their sales. Not to say they're not doing acquisitions, so don't put in the comments, oh Ted, you don't know, they've just bought these and they bought them. But the point is that it's not their major part of their growth strategy, or it doesn't appear to be from these numbers. And up here we've got our total current assets, and you'll notice within the total current assets, big number, 3 billion in cash. So very, very strong cash position, lots of cash sitting there, a little bit of settlements due, and then they're holding customer funds. So these customer funds, we'd expect to be able to sort of, you know, see the other side of that in the liabilities. So if we scroll down to the bottom half of the balance sheets, here we go. So we're just quickly, while we got the current assets, there's the current assets. We always like to just check our current assets versus our current liabilities. That looks reasonable, given. So that's on our long-term liabilities. Let's look at it. So we're going to look at our current assets compared to our the current liabilities, which is this 4 billion. So, you know, liquidity really very, very strong indeed. You know, really happy there. Here's the customers' accounts and customers payable. So you know it's looking pretty good. You know, they got strong liquidity. They've got lots of cash, and we notice down here they've got some debt. And you'll notice that debt has increased. Let me just clear these annotations. So about $1 billion in debt last year, 2.6 billion debt. So a big increase in debt. And we start to think maybe, you know, that big increase in cash is due to the big increase in debt. Okay, so they borrowed lots of money. They're sitting on the cash. What are they going to do with it? And then just right down the very bottom of the balance sheet, looking at the shareholders' funds. How are they financed? They are predominantly financed by paid-in capital. So this is effectively issuing shares. These numbers are zero merely because we're dealing to the nearest 1,000, and they are effectively nominal amounts. So we've got lots of paid-in capital for this business, 3 billion, and they're sitting on. It's a small loss. This deficit. It's not a significant amount. You know, they've been making profits. As I said last year, it was from the sale of an asset. This year, it was from this kind of other expense. But they are kind of, you know, nearly a break even. And are they going to start, you know, making sort of, you know, serious profits, which is, I think, what a lot of investors are betting on. So there is the income statement and the balance sheet, all looking pretty healthy. The movement in equity doesn't really tell us anything we kind of didn't already know. So it's just to say, you know, they sit on a deficit, they make a profit, no dividends, and the deficit comes down. Again, make a profit and the deficit will reduce again. And that's on the next page. So we'll just scroll down and see that. And we can see there that the deficit is coming down negative 297. So this is effectively retained losses sitting on the balance sheet. So that's all looking pretty good. Let's look at the cash flow statement. So from the cash flow, the first thing that we see here is very strong positive cash flow. So, you know, all 3 years, these guys are essentially making very, very strong positive cash flows. Quite a lot of that is due to this share-based compensation. So, you know, they're paying staff in stock. And those guys will be, you know, looking to kind of make a lot of money out of that. But, you know, strong cash flow is good. So these guys, lots of cash in the bank, strong cash flow, operating at a break even. You know, that's kind of what we're looking at here. The investment section of the incomes of the cash flow statement is, well, first of all, you know, we basically just need to ignore all of these numbers up here. So this is all about buying marketable securities and selling marketable securities. And marketable securities, we've discussed this before. This is basically a company which has lots of cash just parks that cash on one side until it needs it. So it's a bit like a deposit account or a savings account. Okay, so it's not really investing in the business. And therefore, in terms of what they're investing, we need to be focusing on these bits here. And we can see, you know, this is the line we're really interested in: $138 million of you know, property, plant and equipment, tables, chairs, computers, servers, etc., etc. Relatively speaking, pretty small, you know, not massive investment, but then these guys aren't a big infrastructure kind of, you know, capital play. So these guys are very much a kind of a transactional income, a volume business. Obviously, they need the hardware and the servers sitting behind that to be able to provide that service. But really, this is a volume game. And down the bottom, we see here, very jumping out of us, we've got the proceeds from the issuance of convertible senior notes. So these are, so senior notes means that they are, you know, it's debt which ranks very highly, which means that if the company goes bust, and it doesn't look like this company is going to go bust anytime soon, but if it did go bust, they would be, you know, first in line to get repaid. But also it's convertible, which means they have the option of converting it into equity. So the holder of those notes will be, you know, kind of sitting there feeling very pleased with themselves that, you know, there's almost no downside, no downside. And you can see that there's a little bit of kind of, you know, there's a little bit of refinancing going on here. But really the kind of the big number that jumps out at us is that they have raised lots of cash by issuing these convertible notes. So the bottom half of the cash flow is telling us that, you know, all of this cash that they've now got, this massive increase in cash, is really due to this, you know, sort of this debt that they, you know, they've raised the money and they haven't actually used it. So, you know, why have they raised it? Now, I'm sure somebody will tell us, oh, Ted, don't you read the news? They have raised it because of X, Y, Z. So, you know, if you know why they're sitting on that cash, or whether they've actually spent it, have they done a big acquisition, then do stick it in the comments, because I only have so much bandwidth. So there's our kind of financial analysis. You know, what do we think of this company? It's growing rapidly. It doesn't look like it's overextended itself. You know, it's all looking, you know, lots of cash, strong balance sheet. It's got some debt. We're not worried about the debt. It is, it's, you know, and it's generating cash. So here's the share price, as you said, 20 bagger. So, you know, done very well. But again, you know, we're less interested in the past, you know, what could have been. We're more interested in where does this go in the future. So the market cap is at 115 billion. You know, the company has, you know, effectively no assets. I mean, it's got, you know, 2.6 billion of net assets. So that's pretty much all goodwill. 4,212% premium, if that makes is of any use to you. You know, really very high PE ratio. Now, that P ratio is high, but the P ratio is high because the earnings are low. and the earnings are low, the way I'm reading it, and I may be wrong here, but the way I'm reading it is that they're trading profitably, but they're spending a lot of money on marketing and sales, and that marketing and sales is driving organic growth. So once you're established, once you're there, you still need to keep that sales and marketing, but you don't have to spend quite so much. So a good analogy there would be Coca-Cola, for example. For every can of Coke it sells, it spends 40p making the can of Coke and 40p marketing that can of Coke, and it gets to keep the other 20p. Now, it's not as simple as that, obviously, but that's a kind of very rough approximation. And for these guys, they're spending all of the money they're making on sales and marketing, and I don't believe that they're going to have to continue that. And as that comes down, then the profit comes up, and as the profit comes up, then the PE ratio becomes much more reasonable, or the share values start to increase. So hopefully that little analogy made sense. So the PE ratio, I think, is high because the profits are low. Now, we could argue there the same for Tesla, for example. We looked at Tesla a long time ago when it had a P ratio of 1,000, but Tesla, the overall market cap basically said it's going to sell, 1 in every 3 cars in the world, for example. And we scratched our heads and just said, that just doesn't make sense. So, here, it looks to me like there's room for growth. I think what's really interesting about these guys, we'll go back to that point about the Bitcoin, and they'll be in the crypto, and you look at, say, El Salvador, and you start to think about, countries which really want to just, remove their dependency on the dollar, and is, something like Bitcoin, is that going to gain traction? Are more people going to follow El Salvador, for example? If you Bitcoin and understand, like it, you're nervous of it, it is a pretty exciting area. And obviously, if Bitcoin doesn't win in Cardano or Ethereum, for example, then these guys will be they will be in that space as well. So you're you're hedging your bets rather than putting all your money into one particular crypto. But we all want to get into crypto here. So there you go, Hamid. That's my analysis. What do we think of this company? It is, it looks nice. I wouldn't feel nervous about having exposure to Square for the future. Now, it's going to be volatile and it may well go down, but fundamentally, I think the numbers are stacking up. It's all looking in the right direction. It is expensive. But you're really thinking about, what's the potential for this company? If it's doubled its revenue over the last year, can it do it again? Can it do it again? Can it do it again? I'm not sure it's going to be a 20 bagger, but then, hey, never say never.
Yeah, agreed. It looks solid. I thought the Bitcoin, the proportion of revenue from Bitcoin was very interesting. And just an added note, they have made a very large acquisition recently, and that's why it's not showing up in the annual reports. So you're absolutely right, Ted. It was a company called Afterpay, so that's in the buy now, pay later sub-industry. But that was a $29 billion acquisition, all stock. So it'll be interesting. Maybe we come back to this when they release their next annual report, and we can have a look at what impact that had on the annual report and the calculations there. So interesting that happened, but absolutely right. It wouldn't have shown up on this annual report. So yeah, that was really interesting. What does everyone else think, right? As Ted alluded to earlier a few times, if you know this industry really well, if you have some additional information that you would like to share with the community, then please do so. This is an educational video, and we are a community doing that. We're not here to be right. We're here to educate others and each other. So let me know your thoughts. Please do like, share, subscribe, and we'll see you in the next video. Thank you very much, Ted.
See you later, Moe.